Hi everyone and welcome back to Stephan Livera podcast brought to you by Bold. For American listeners, you can buy Bitcoin at the best rate in the industry and you can also get sats back using the Bold debit card. Now, joining me on the show today is Pascal Eberle. He is the Chief of Staff over at Sygnum Bank, as I understand, based in Switzerland, but as I understand, sort of like a crypto neobank, and I thought would be interesting to get you on to hear some of your perspectives. So first off, welcome to the show, Pascal.
Thanks a lot, Stefan, for having me on.
So tell us a little bit about yourself and what Sygnum Bank is doing these days.
Sure. So I'm Chief of Staff at Sygnum Bank and leading the CEO office, so working on a range of strategic projects with our executive board and the board of directors. I also co-lead the Bitcoin at Sygnum initiative, which is a strategic project we launched to get a bit further entrenched in the Bitcoin space, meaning to build business relationships, but also educate internally and externally about Bitcoin, and then also dabble and then develop more Bitcoin-related products and Bitcoin tech. My background, basically, prior to Sygnum, I was in management consulting, so I worked at the Boston Consulting Group in Zurich and Dubai for almost 7 years. And I think my Bitcoin journey, I had several touch points with Bitcoin, but never really took the time or interest to get it, which I obviously regret now. But then really fell into the rabbit hole, I think, in 2022. Had the chance to early on, fall upon, great authors like Gigi, Lynn Alden, also your podcast, amongst many others.
Fantastic.
And then Sygnum,
well, thank you.
Basically,
yeah.
But
go on. Tell us a little bit about Sygnum's offering, and as I understand, you're more like a high net worth and maybe institutional Bitcoin kind of banking and fiat banking.
Yes, correct. So we're a global digital assets banking group founded in 2018. We're basically a fully licensed Swiss bank, but also hold licenses and registrations in Singapore, in Abu Dhabi, Liechtenstein, and Luxembourg. And basically what our core value proposition is that we offer an integrated fiat and digital assets banking services to institutional and private accredited investors. So that's no retail business, but definitely on the more wealthy clients and then institutional side. Basically, we serve individual clients, family offices, external asset managers. We do have funds and hedge funds, corporate and DLT firms, including many Bitcoin miners, for instance, and then also other banks, which we serve in a B2B or bank-to-bank model. And in terms of offering, it's, like any bank, right? At the core, it's really the safekeeping of your assets, be that fiat, traditional securities, or digital assets. And around that, we do have a trading offering, credit and lending offering. We have an asset management and the tokenization team, and then the dedicated B2B solutions for our banking partners.
Yeah, so I guess like typical, transactional accounts aspects of it, you have lending. So I presume then if people want to borrow against Bitcoin, that kind of thing, you have that kind of product also.
Yes, exactly. That's our main, I would say, offering in the credit and lending space. We also in the past offered hash rate backed loans, which is obviously a very specific product for Bitcoin miners. And that's basically what we do in the credit and lending space. We also do syndication.
And as you mentioned, you have offices around the world. So then are you restricted in where you can take clients, or is it mostly global with the exception of like certain jurisdictions, or how does it work there?
Of course, we always follow the local jurisdictional laws, and that also limits us in terms of, which countries we can serve. But broadly speaking, our clients come really from all over the world, and with a certain exception of countries that are just outside of our risk appetite.
Gotcha. Okay. Yeah. And so, let's talk a little bit about what's happening in the industry. I think there's a lot of things going on. I think as I look at it, obviously there's tons of things always going on in Bitcoin land. But what I'm seeing nowadays, there's a ton of interest in things like treasury companies, and there's a ton of interest in lending. These are kind of big topics nowadays. So what are you seeing on let's say the treasury company, or just as a corporate treasury asset side of things? What are you seeing either at Sygnum or just in general?
Yeah, I think the Bitcoin treasury companies are definitely, I think, the hottest topic in Bitcoin right now. I personally probably fell into this specific branch of the rabbit hole in October last year and just found it really interesting, maybe a bit from my personal interest because I studied business administration. So I also had my fair share of corporate finance classes. To me personally, I think it's really, the next step, I would say, in Bitcoin adoption. It's what Michael Saylor so eloquently puts as the transformation of capital from the 20th century into capital for the 21st century, digital capital, and being Bitcoin. And I do think it will, in TradFi circles, it's basically dubbed the franchisation of Bitcoin. I think it's probably rather the Bitcoinization of finance, because essentially there's tons of capital that is locked up, so to say, in very specific forms or pools of capital. And what these Bitcoin treasury companies do, they basically make these pools of capital accessible to get some kind of Bitcoin exposure by creating financial instruments, be it equity or debt products, that cater to those investors, that are in line with those mandates and risk appetites of those investors, but offering them superior risk return profiles than other products in these categories. And so I think it's really like...
Yeah, I was just going to talk about the different types of these, right? Because obviously you've got, at the top dog, MSTR, the big public companies, and then you've got all these other much smaller public companies. And then you have the, let's say, companies who hold Bitcoin, but they're not doing kind of the aggressive balance sheet financial engineering side of it. And then as you go further down, you've got private companies and other people who are just doing their own Bitcoin treasury play. And so do you want to just, I guess, maybe without doxing individual clients or things like that, but what are you seeing in your client base? What are they interested in? Has there been a lot of interest? Is this in the Bitcoin as corporate treasury asset story?
Yeah, I would say there's like three kinds of cases, so to say, right? You have just regular companies that are close to Bitcoin and get it. And so they decided to have part of their treasury allocated to Bitcoin. And those are very much, or often actually non-listed companies that don't announce it even, and just, maybe were years ago already in the space and just built up a stack, and so they became clients of us because at that time there was no other bank that would want to bank them even. Then the second type of companies are probably the Bitcoin treasury companies, so those who are really very, I would say, open about the strategy and also want to drum up quite some excitement. And we're always in touch with a couple of those as well. Because as an institutional grade custodian and brokerage firm, we can help them in safekeeping their assets. And then the third type of company is probably the large part of companies that is actually not yet a client and does not yet have Bitcoin exposure, and hopefully will sooner than later realize that just holding a little bit of Bitcoin might be smart just in case it catches on.
Yeah, so let's talk a bit about those companies who don't have Bitcoin yet. Now, obviously, this is a Bitcoin podcast. Everyone here, we're all pro Bitcoin, and many of us are highly allocated to Bitcoin. And so it's just funny when, we talk to people who are not in Bitcoin at all, or they have a very, very small allocation. And to us, it seems like, what are you doing, man? Like, you're just getting wrecked by fiat debasement, right? What are the common misconceptions that you find when you talk to like fiat companies and fiat people who really haven't gone down the Bitcoin rabbit hole yet?
Yeah, I think, so it's the same as with our friends who are non-coiners or non-Bitcoin maxes, right? You will hear like, oh wait, it's way too volatile. Then it's a Ponzi scheme. It's not good for the environment. All these, the usual FUD is out there. And then I think an additional layer of complexity, since these are not individuals that can just take their decision on their own, but it's institutions, so you have governance layers, right? So you need to, if you're a company, you need to make sure probably your shareholders are on board. Your board of directors needs to be open to the idea to formulate this in their treasury strategy. Then you need to have your C-level, a CFO who understands it, gets it. So there's various layers of additional complexity that make I think companies being slower than us individuals. And that's basically, I think, what we feel. And so it will, in my eyes, take still longer until just the regular company will hold Bitcoin on their own.
The other big one nowadays is they'll say, okay, so let me put it this way. Some of the past FUD lines have now diminished a bit, right? The environmental line, I think that's actually diminished a lot in recent years, especially with AI, right? Now that there's all this AI use, it's kind of, everyone's just gone full steam ahead. Let's have energy. We want it because we want AI. And now the Bitcoin energy concern is almost, I haven't heard anyone really making that argument now. I mean, I'm sure there are people out there, but it's not that much. Nowadays, what we're seeing is maybe people saying, volatility, they're afraid of it, or maybe we're hearing the line, oh, Bitcoin doesn't have cash flows. So what do you answer to that when they give you this line about, oh, Bitcoin has no cash flows?
Yeah, it's a great one, right? I mean, my personal opinion is like Bitcoin is not made to have cash flows, right? It's digital capital, it's money. And on its own, it shouldn't generate cash flow as same as gold. It doesn't generate little gold coins if you just keep it together. And so in that sense, it's the same with fiat, right? If you just hold fiat per se does not produce cash flows. You have to put it at work. You have to take risk to get interest. And so with Bitcoin, it's exactly the same. And I think people, it's just very hard for them to grasp, right? That Bitcoin is actually a much, much better form of capital or money than what they usually see as the usual money.
And then in the world of, I guess, treasury companies, this is kind of a big, even in the Bitcoin world, there's like a lot of debate. And I would say there's a range of opinions. I'm personally bullish on them, but of course, I still see there are risks there. Like, it's not that there's no risk. But I've seen a gamut, right? Like, on one side of it, it's like the kind of cypherpunk, maximalist, kind of self-custody only view. In the middle is maybe someone saying like, oh, look, I'll tolerate this. I'm not like actively supporting it, but, you know, I can't stop them. Bitcoin is the money of enemies. And then on the other hand, you have people who are like full steam ahead, you know, treasury company maxis. Where are you at there? And, you know, what's your stance?
Yeah, I mean, personally, I'm probably between 2 and 3, although I have a lot of sympathies for the original Bitcoin ethos, right? So I think this by no means a Bitcoin treasury company. I mean, this is a security, it's a stock, right? So you can, if you say this is the same as holding your own keys, then you definitely didn't get it. So I'd say every individual in my eyes should be a self-sovereign individual, custody their own Bitcoin. But having said that, again, right, there's a lot of capital that is locked up where it's just, there's no way that, you know, the 300 trillion bond market will become self-custodized Bitcoin on a hardware wallet. So, and then the question is, what's good for Bitcoin at the end of the day, right? I think having these companies that manage to access these pools of capitals and actually deliver superior returns for investors who are looking to invest in these kind of forms of capital is a very legitimate thing. And I think what I really love about the Bitcoin treasury companies is actually how grossly misunderstood they are, mostly by Wall Street, unfortunately also to a certain extent by Bitcoin circles, because it's really, you know, the Venn diagram where you need to understand Bitcoin and you need to understand corporate finance. And that's really a very, very small, I would say, number of people who really see both sides in that sense.
I see, yeah. And there's this big, you know, it's almost become a meme of paper Bitcoin or paper Bitcoin summer. Now, there are some of the treasury guys like, you know, Stephan Livera and others who are, let's say, embracing that meme and saying, yeah, it's paper Bitcoin summer. Like, let's go. It's paper Bitcoin summer. That's a positive thing from them, from their perspective. And others see that as like, no, that's a put down. You guys are dealing in paper Bitcoin. You're selling paper Bitcoin or you're selling equity to people. Yeah, but I guess that comes back to, again, that same kind of where on the gamut are you? But let's still man it a little bit. If they said, well, look, all these people are going to use custodial Bitcoin. It's all going to end up being captured by the state or regulated by the state. Does that challenge the decentralization of Bitcoin? What do you think?
Yeah, absolutely. I think so. I mean, you know, like Jeff Booth always says, right? As long as Bitcoin remains decentralized and secure. And I do think that this will definitely attack this decentralization aspect, right? If people do not hold Bitcoin, and also if Bitcoin is just used as a store of value, but not as a means of exchange, that's what Jack Dorsey always says, it will fail, right? And I'm 100% personally also of that opinion. But I also think that, you know, there's a right for both to coexist. And what I really hope as well is that many people who probably get exposure to Bitcoin through the Bitcoin treasury companies do also their own proof of work and dig a bit deeper and then get into the original ethos of Bitcoin and understand the value of having a digital bearer asset that you can custodize yourself, that is permissionless and that you don't need to ask anyone, and seeing the advantages of this over security that holds Bitcoin for you as part of the treasury stack.
Yeah, I see. And so, yeah, I mean, some of this is what we're talking about is at the public level. So if we bring it back to just just to be clear, the public level who are, you know, issuing equity and debt to, let's say, you know, do financial engineering, quote unquote. And then you've got the other class of, you know, just normal businesses, whether they're public or private, who just want to hodl, right? Like they've been earning, they've got some cash flow, they want to sweep those cash flows into Bitcoin and they want to hodl that. That said, it could also be that some of these businesses are private or even public ones who want to borrow against, you know, some of that stack to get more Bitcoin. Are you seeing much of that?
Mhm.
Like, are you seeing large institutions who, let's say, they want to borrow against their stack, but not like 100x, degen style, but more like 1.1 or 1.2x? Are you seeing that kind of thing?
Yeah, absolutely. I mean, we've seen tremendous growth and interest in the lending business, where Bitcoin is clearly the asset that is the most widely used as collateral because it's 24/7 available. It's liquid. It's a global market. So I think it is the pristine collateral, and it's also natural that if you as an individual or as a company, if you have a certain stack, that you start thinking, okay, we could use part of this stack as collateral to lend against. And then, as you mentioned, right, in the past, I do think that, lending again on Bitcoin or yield, it did have a very negative connotation because there were a lot of bad actors in the space. And so I think many people unfortunately had to experience through a very hard way what it means if you have a non-trusty counterparty and what counterparty risk means, or also duration risk if you have a term loan and it expires in the wrong moment. And I do think what we see now is really like, we have better regulation. So you see basically the well-regulated players already in the last bull market, they made it through the bear market, they survived. And that's clearly the players that will continue to survive going forward. And I also think that, what you mentioned, the degen ways of over-leveraged Bitcoin trading, that's obviously, I mean, you get wrecked if you do that. So for instance, at Sygnum, our LTVs, loan-to-value ratios, they're anywhere between 40% for private clients to maximum 65% for institutional clients. And I think personally, I would, my very personal recommendation would never be to go above 10% or max 20% if you're really good with keeping your risk and have some extra I don't know, your securities or other collateral you could shoot in case that Bitcoin really drops. But at the end of the day, it's really everyone's own decision. And yeah, it's just important to really go with I think with a good regulated counterparty and then not over leverage. Don't let the greed get the hold of you, basically.
The lead sponsor of this show is Bold, the banking platform designed for Bitcoiners. With the Bold virtual Visa debit card, you earn Bitcoin back on every purchase. The more Bitcoin you buy with Bold, the more sats back you get on the card. Buy $2,500 of Bitcoin and earn 3% sats back. Keep stacking with Bold to earn up to 10% sats back. Bold offers the industry's lowest fees on Bitcoin buys and sells with zero added spreads. When starting out, you can use Bold Wallet, which is managed by the team, but Bold is also supporting self-custody with Bold Vault, a 2 of 3 collaborative custody multisig for zero monthly fees. With Bold, you get your own FDIC-insured checking account to store and send fiat, pay bills, direct deposit your paycheck, and replace your legacy fiat bank. Sign up today and get zero fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Go to getbold.io. This episode is brought to you by CoinKite, the makers of my favorite Bitcoin hardware wallet, the Cold Card Q. Now, some people think self-custody is too hard, but it's really about taking responsibility for your Bitcoin wealth and understanding that self-custody gives you a true feeling of liberty. The Cold Card Q has a full keyboard and big screen. It's got 2 secure elements and a true air gap, allowing you to go fully air gapped using QR codes from seed generation to transaction signing. You can power the device using 3 AAA batteries, so you don't even have to plug it into the wall for power. You can easily use it with Sparrow Wallet for PC or Nunchuck on mobile, and you can dial it into the right level of security and complexity that you choose. If you want a simple setup, just use 12 words and single signature. If you want passphrases, easy. If you want to add multi-sig or co-signing features, you've got those too. So go to coinkite.com, use code Livera to get 10% off on your cold card or other devices and level up your self-custody today. Yeah, I see. And now, I guess we are going to hopefully see some evolution there because up until recently, the rates have been kind of high, right? And the terms available for this kind of thing have generally not been like longer term loans. It's often been like 1 year loan and you're trying to roll it over. So can you outline, at least from the Sygnum case, what kind of interest rates are on offer here for the people who want to borrow against their stack? And then what's the loan term? Is it 1 year, 2 years, 3 years? Like what are you offering there?
Yeah, sure. Maybe first, if you step back, the reason I think why this was because so far there was very limited lenders who were willing to lend against Bitcoin, right? Most banks still today don't do it because they don't understand it yet. But once we see more and more banks being open to accepting Bitcoin as collateral and lending, then we will for sure see the rates going down. And the reason is very simple. It's because banks, every Bitcoiner knows that, are very close to the money printer. We have fractional reserve banking, so they can obviously lend out fiat to advantageous terms. At Sygnum, as a Swiss bank, I would say we also profit, so to say, from the existing fiat system in that sense. So our rates are typically anywhere between 5.5 to 9.5%, depending on which currency that you draw, and if you reinvest the loan with us, or if you take it out of Sygnum. And then in terms of the other terms, I think that really, for us, I think that's a remarkable difference between other typically the non-bank lenders, is that for us, the Lombard loans that we offer, they don't have a term. So it's basically a standing credit line that you have. It works like an overdraft facility on your account. You could just call it, or also pay back as you want. So it's very flexible in that sense, which then takes away also the duration risk that you might incur if you have a fixed term loan, 12, 24 months, whatever you see there, right? And then I think as well as a last point, what's probably, depending on which lender you choose, we at Sygnum, for instance, our margin call procedure, there's always a human in the loop. So it's not like, on some of the large exchanges where it just get auto liquidated at 3 a.m. on Sunday morning. At Sygnum, there's for sure like someone who would contact you, and that helped us as a bank as well to not have many margin calls or reduce them, because it just gives you much better touch point and feeling of the client, where they stand, whether they can top up collateral, and you really de-escalate a lot of, I would say, tight margin call situations, even in the craziest hours of the market. And so that, I think, is an advantage for both the lender and the borrower.
Interesting. Okay, and so the summary of that then is you can get lower rates this way with, let's say, more flexible loan term periods, whereas in some of the other situations, you maybe now, and that maybe also be kind of a trade-off of like this more self-custodial on-chain style versus more TradFi style. So there are other lenders out there where maybe they allow the borrower to hold one key in a multi-sig, maybe 1 out of 3 or 1 out of 4 or something like this. But then there might be some trade-offs around that, it's only a 1 year loan term, or the rates might be more like 12 to 15% ish. So can you outline, so I guess, do you see that as that's a fair summary of like where things are right now, or how would you distinguish there?
Yes, absolutely. I think those are very good points, because also, like, of course, if you go with the bank, then this is you're going to be KYC, your assets are with the bank, right? And so, I mean, then again, it depends also on jurisdiction, right? In Switzerland, for instance, with the DLT Act in 2021, it's by law, Bitcoin is seen as an asset. So that means also custodians of this asset, they have to keep them segregated, not necessarily on chain, but in a case of a bankruptcy, these assets are bankruptcy remote. They're, for the banks in Switzerland, they're off balance sheet. The banks cannot rehypothecate your Bitcoin. That's also, I think, a misbelief that, let's say a caution that many Bitcoiners warn, which is correct. But for instance, as a Swiss bank, without consent of your client, you cannot rehypothecate any collateral, be it Bitcoin, be it traditional securities, or whatever. And so I think that's a fair summary of what you said. I think what's also very important is the segregation that we have, let's say, as a bank by law. I think that's, something that I would expect a trend to come more into the traditional finance space as well, because Bitcoin offers, as you said, multi-custody, or, you could have, with script, you could even have certain conditions programmed into the contract. And so I expect that these things should come as well to the traditional banks, because they will really add transparency and make it more secure. And I think that's also in the spirit of Bitcoin. If you then want to go with a regulated bank or not, because you want KYC or not, that's still up to you. And I think there should be a plethora of solutions for a plethora of needs.
Interesting. Okay. And I'm curious then, for Sygnum's case, there might be, like, I could imagine there might be listeners who are, either whale or high net worth, and they might be looking at, hey, can I borrow against some of my coins, get some fiat, and then spend that? So do you have like a card to off-ramp it, or is it more like they would borrow against to get some fiat and then have to send that fiat to another bank or to a card somewhere else for them to actually fiat off-ramp when they're buying things, day to day?
Yeah, absolutely. So if you decide to not reinvest, let's say, the fiat or the loan, then you can, with your Sygnum Bank account, you can just send it out with any fiat payment to whatever bank you want, or you can use Sygnum, our bank account, to do your payments. We also offer credit cards. So in that sense, that's then really the advantage of being a bank and the digital assets, let's say, expert under one roof, right? You really don't have these or you can also draw it in stable coins if you want to send those out, because we also have digital asset transfer and transfer out. So in that sense, you're then really free to do with your money as you please.
Gotcha. Yeah. Okay. And so, coming back to that, I guess, distinction or trade-off, let's say, of the kind of on-chain DeFi kind of style of loan versus, let's say, the more TradFi style of loan where you custodially just deposit your Bitcoin in, borrow some fiat, and use that to, let's say, either for your daily living expenses or because you want to lever up and buy more Bitcoin. So out of those two worlds, let's say the kind of the on-chain lending world versus the, let's say, the TradFi style, how do you see those markets evolving? Do you see them as both growing, or do you see it like, the TradFi market today is just so much bigger, and therefore the TradFi side of that is going to be a lot bigger than the, let's say, the on-chain lending world?
I do think there will be some kind of, I don't know, maybe almost a conversion of the two, right? Because I think the on-chain lending style, that's, has unique advantages that the TradFi system could not offer to date, because there were no digital assets in that sense. So I do think, as I said, I think that banks should go into more multi-sig and these technologies, because it just makes a lot of sense. I think personally, I think the future of institutional custody will be also in multi-sig. And at Sygnum, for instance, we already today, we have like, multi-custody architecture where we also have vault wallets where you have your own, your assets are then not only segregated in our books, but also on chain. So you have your own public key, and you can always see and monitor your collateral. Even if you took the loan, you can see that we don't move them away. We don't rehypothecate them away. And I think that I expect that just to be even more pronounced in the future. And likewise, I expect that those DeFi actors that exist now, they will hopefully continue to exist. They will potentially also seek more licenses and regulations, because sometimes they have to in order to operate in certain jurisdictions. And so that's really, at the end of the day, you will have, in that sense, a kind of a more of a melting pot with maybe 50 shades of gray that hopefully also then serve all the needs of different clients. And I really hope that there will also be the total anonymized, randomness lending and borrowing market, because there's those people who want that as well.
Yeah, it's interesting how we're seeing this kind of big spectrum of things, and the way, at least I'm seeing it now, of course, I want to see more and more people just use Bitcoin in general, but I see some of these loans as helping them achieve some of their goals, right? In some cases, that's if they want to lever up per se, or they want to not sell, right? They want to be able to borrow against some of their fiat, some of their Bitcoin, to get some fiat to then spend that for living expenses so that they don't have to sell their Bitcoin. Then it kind of also facilitates certain Bitcoiners' goals. But of course, there's a range of how cypherpunk and no KYC and peer-to-peer you want to be, versus how if you're not say pro KYC, but at least you can stomach some KYC, which is the unfortunate reality of today with AML and sanctions laws and all of this. But I guess what I would say though is also that if I think about where most of the wealth of the world is today, most of it is in TradFi platforms on stockbroking platforms and held by boomers. And so what are many of those people going to be comfortable with? Probably more TradFi platforms, at least for now. But like you said, I think it's sort of going to merge and mesh in some weird and wacky way over the next, decade or two.
Yeah, I think so too. And honestly, personally, I think it's actually smart. If you're a Bitcoiner, this is the best asset to ever have. And so I think, I do agree that leverage is not good, because it basically feeds your internal greed. But in a controlled way, it really allows you to keep your Bitcoin. And for instance, to buy a house. And that's nice, because then you have a house to raise your family with, and you don't have to part from your Bitcoin. And if you do that in a responsible way with a good counterparty and with a sound, let's say LTV, I think then it's great, and it allows you in a way to drive your own speculative attack on fiat, right? And that's what, if you're honest, what all the wealthy people today already do, right? They just don't hold Bitcoin, but they hold probably houses, apartment complexes, and they lend against those, or art objects, or whatever other random valuable items that exist.
Yeah. And just, you mentioned the rates are basically in the single digits. Can you give us like a rough idea? What is the rate for USD? What is the rate for CHF? Can you give us a rough idea?
Yeah, sure. So obviously, being a Swiss bank, the cheapest rates we can offer are on Swiss francs. So those really start at 5.5% and go probably 6.5. And then you have euro, and US is the most expensive with the highest rates right now. So there you definitely the 8 to 9.5% range.
Gotcha. Okay. And then what are the, like, is there an origination fee on the loan or some other, loan fees?
So we do have, I think, a 1 or 2% fee that only kicks in case you don't have any, or well, if you don't draw the loan, let's say, right? So it's basically counter-calculated against the interest payments you have on your loan, and that's basically just to compensate for the effort that we do have to reserve the capital. But in that sense, if you draw your loan, then this origination fee is counter-calculated against your actual quarterly interest payments, and so you don't feel it.
Okay, I see. Yeah, okay. And so, uh, and then I guess you're straddling some of these worlds, right? Because you're coming from like this kind of Bitcoiner sense of like, the typical, like we talk about not your keys, not your coins. But then on the other hand, in order to access some of these services, especially with in this style, it requires you to give up some of your custody. So how do you think about
Mhm.
that? Or how do you, some of your clients even think about that? Is it that they, like, just thinking it through, they do some of them keep most of their stuff, in their cold card or their multi-sig, and they only deposit into Sygnum what they need for the loan, and then maybe you've got the less tech savvy ones who just keep everything on the platform with you. Is that how it works, or what do you see?
Yeah, I do think we have everything, right? I mean, we probably have some people who come more from not even the Bitcoin space and just kind of got exposure to it and have their coins with us, and that's where they keep all their coin. And then you probably have the Bitcoin maxis who, only with a heavy heart went to a bank and gave part of their keys because they wanted to lend against the Bitcoin. And I do think, that's probably an adequate picture of the reality. In terms of the companies, I mean, even there, I would say, right, we have many clients in the mining space, and those they have a mix between self-custody and then probably using Sygnum as a custodian for, especially if they draw against their stack because their day-to-day expenses are in fiat. Yeah.
Yeah. And so other obvious questions people will have is, look, if they want to use Sygnum as the custodian, can you tell us a little bit about the technology and the custody stack you're using? Like, is it multi-sig? Is it MPC? Like, can you outline a bit about the security that you have there?
Yeah, sure. So we have, I mean, our custody stack is institutional grade. So we do have a multi-custody strategy as well that uses different platforms. We have some of them are developed in-house. For others, we use the best-in-class providers, I'd say, worldwide. And then we basically have two types of wallets, right? We have one that we call the trading wallet. That one is, so to say, more hot. There, it's basically an omnibus account style, so you don't have your own public address. And then we have the vault wallets, and you can just swap between the two basically with no fees in our Sygnum in your Sygnum banking account. And in your vault wallet, it's segregated on chain, and then you have your public address that points towards it. The custody team is also very busy looking into additional types of custody. So potentially cold storage, that's also a requirement in certain jurisdictions where we want to operate in. And then we're also starting to look into how multi-sig works and how we can incorporate that together with some partners, which I'm very excited about as well.
Gotcha. Okay. And so, like, I presume will have, maybe there'll be some American customers or others who, or wherever around the world, they might have certain legal requirements about how their coins have to be custody. So can you talk to us a little bit about what are the main legal requirements on that? Like, in some cases, it's like it needs to be like a qualified custodian, or their auditor will want to check that you have SOC 2 compliance or this kind of thing.
Yeah, sure. So we see that especially in the B2B space because we enable other banks basically as a white label service provider to offer their clients custody of digital assets and brokerage. And so obviously there we have the very tough, let's say, onboardings like this famous Wolfberg questionnaire. They do audits with us. There's regulatory requirements sometimes even that their regulator could access our basic internal documentation and audits. We do have also the regular ISO and ISAE reports that are done annually to test your stack. We have in-house penetration testers as part of our IT security team. So there's a lot of I would say, regular, just for an institution in the institution to institution space, regular and normal procedures that are in place to ensure that those other institutions, that you're even eligible, let's say, to be a material outsourcer to those other institutions.
I see. Yeah. And now there's different regulation, obviously coming in around the world. Now I know Switzerland is not part of the EU, but MICA is like a big deal in EU. What's happening for you on the MICA front for your European customers?
Yes, it's a great question. So, I mean, current European customers that bank with the Swiss bank, they are obviously, they use the Swiss bank. But as I mentioned at the beginning of our the discussion, we have a subsidiary as well in Liechtenstein. Currently, it has the local license from Liechtenstein, and we're in the process of converting that one into a MICA CASP license, which will then allow us to actively also serve clients in the EU. So far, we only serve clients in the EU on a reverse solicitation basis, meaning that those who approach us proactively, we're happy to serve them, but we're not allowed as a Swiss bank to actively service or go out into the EU and acquire clients. And so that's why we built the entity in Liechtenstein, and we'll get a license there that will then allow us to passport our services throughout the EU.
I see.
Very complicated
and then
in the regulated space.
It'll be that story of depending on what country that customer is in, that will determine what products you can offer them, right? Whether there might be some customers where you can offer them a trading, like a normal transactional account, but not something else.
Yeah. Very oftentimes it depends. Like the cross-border rules depend on the country the customer is from or resident in, the country that you as a service provider are in, and even the country in which the interaction happens. So it's actually incredibly complex sometimes if you're an RM and you have to look at all these different country manuals. But that's just part of the deal of playing in the regulated space, I would say. But as you said correctly, it really depends on a bit which jurisdictions you're from. So also, like we do not serve currently US clients or Russian clients or Chinese clients, just because that's outside of our risk appetite. That's very normal.
Oh, right. So you actually don't have US clients. Okay, gotcha.
No. I mean, Swiss banks probably had very bad experiences with the US.
Right. Yeah. Sorry. Yeah, I forgot about this. Yeah, this is like a big deal. Yeah. This is like the famous thing of like how they tried to pierce Swiss bank secrecy, and now like a lot of international banks don't want American customers because of kind of the regulatory headache, basically.
Yeah, basically, as a US citizen, you're almost debanked if you're in Europe. I mean, even at Sygnum, we have some colleagues of ours who are US citizens, and they unfortunately can't even have an account with us. So it's not that fun. Yeah.
Yeah, damn. Okay. So would you say most of your customers are in Europe or Asia or Middle East, or like where? Give us can you say?
Yeah, sure. So I would say definitely the majority is Switzerland and Europe. Then we also have quite a client base in Southeast Asia, because I mean we've always been a born global, so to say. And Singapore is always kind of at par with Zurich, and then also the UAE where we opened up a branch that we've seen a lot of inflow, because I mean it's a jurisdiction that attracts a lot of Bitcoiners, but also generally people from the crypto ecosystem. And what's really special with the UAE is actually that we have a proper branch of the Swiss bank, meaning that you can, as a UAE citizen or resident, you can bank with the Swiss bank and have a local RM in the UAE, which is quite nice, because also from a jurisdictional point of view, it's nice to have a bank in Switzerland, I guess. I lived in Dubai myself a few years ago, and I was always happy to keep my Swiss banks, even though I also had Emirati banks, but that was nice, in terms of diversification of risk and so forth.
Gotcha. Yeah. And so just I guess a few other things. You were touching on kind of the rehypothecation question as well. So, I mean, you were touching on this before, saying that, it has to be maybe not on-chain segregated, but legally segregated and bankruptcy remote. So can you explain a bit about what that would mean in the case of a bankruptcy?
Yes. So let's say, a Swiss bank, if they go belly up, right? There were some examples in the past as well. What happens is that basically the bankruptcy procedure kicks off immediately as of we don't have a Chapter 11, but the equivalent of that, basically as of the filing. all the assets are, so to say, frozen, and the client's assets, all the client's assets are clearly separated away from, whatever is left on the equity side of the bank or on the liabilities of the bank side. And that's, true for traditional securities. So if you have Apple stock or whatever stock, that's always yours. It's true for digital assets because they're treated the same way. And what's interesting, and I didn't know that before I started working in the bank either, but in Switzerland for cash, there you only have what's called in German Einlageschutz, so the customer deposit protection. I think it's like this equivalent as the FDIC insurance in the US. That's 100,000 Swiss francs. So everything that you hold above 100,000 Swiss francs in cash with the bank would actually be part of the bankruptcy state. And so if you hold a lot of cash in Switzerland for whatever reason, if you want to hold a lot of cash, then you should actually also diversify it across several banking relationships so that you don't go above 100K in cash. But yeah, just going to Bitcoin, it's better anyways.
Right, yeah. But so you're saying if that would be fiat held in a Swiss account, but Bitcoin held in a Swiss bank account would be different.
Always bankruptcy remote, yes. Because it's treated like an asset, so it's always directly ownership of that client. And so it's never part of the bankruptcy state. It's also not on our bank's balance sheets. I think that's a difference as well with other banks. Sometimes they have large balance sheets where you actually see the client's deposits on it. In Switzerland, that's not the case. So we say it's off balance sheet and it's bankruptcy remote.
Oh, interesting. Okay, yeah. So it just provides like a different legal, I guess, structure, and that can have advantages. Okay, yeah. And then as this space, let's say, evolves out and more people come into either using Bitcoin or even they have been an existing Bitcoiner for a while but never went into any of the borrowing or collateralization aspects of it, and that starts to grow. What do you foresee as more people start to do this? Like, do you think it's going to become popular for people to use these collateralized lending products now that they are sort of becoming more popular and maybe the interest rates are coming down a little bit on that?
Yeah, I think it's a natural evolution, right? If you think for a bank, if they start dealing with Bitcoin, I mean, the base offering is for sure just custody and trading. Then you will have transfer in, transfer out of Bitcoin. That is operationally complex for a bank, right? Also from a compliance point of view, you have the travel rule and all these legislations that apply on digital assets transfers. And then the next step beyond that is logically, okay, what do you do with the Bitcoin you have on stack at the bank? I think lending is then the next thing. I think a Lombard loan is the plain vanilla lending product where you really give your Bitcoin as collateral and you get cash against it. But I do think there will be many, many more lending products where a Bitcoin sliver will be inserted. For instance, mortgages, right? It would make a lot of sense if you, let's say, want to buy a house, you give the house as collateral, and then, as part of this mortgage, let's say 10% or 5%, maybe just a little sliver gets invested into Bitcoin. It's a 20 years mortgage, so you have a long time horizon to invest, and then that gives basically, it de-risks the whole house, right? Because your house might be flooded, it might burn down, you might lose your job and not be able to pay back the loan, but the Bitcoin is still there. So it gives security to you as the borrower, but as well to the bank as the lender. Leon Vankum in Germany is actually pioneering a lot in this space, and I think it's very interesting. So I can recommend following him. And then there are other lending products as well. So, I once in Saudi Arabia worked on a project where we advised an entity that did project finance. So those are really large investments, let's say, to finance a chemical plant. And then basically the loan is paid back through the profitability of the proceeds of this plant. Here as well, you have a lot of execution risk, and it's the same logic as with a mortgage with a house. I think it would just make a lot of sense to put part of this loan into Bitcoin, park it for the whole duration of the project, because then you have really a de-risking factor if, let's say, this chemical plant blows up, or if the products just don't have product market fit or whatever, right? You still have that Bitcoin at the end of the day. So we think that if you start thinking in that sense, I do think that Bitcoin should, over the long time span, let's say, permeate all of different kinds of lending products, because it's just a great hedge and the de-risking factor in them.
Yeah, I think that's definitely something. I've had Leon Vankum on before, and also interesting are the battery finance guys, Andrew Hones and his team. they've been talking a lot about this kind of idea of sort of loans, but cross-collateralized with Bitcoin. So they might be doing a commercial loan, but also buy some Bitcoin. Or we're starting to see, I think in the US, I think we're starting to see some of these products where it's like draw out your home equity and, you know, buy Bitcoin with that. And we're starting to see these different ways of like putting
like the reverse
Bitcoin as
mortgages,
part of putting in Bitcoin as part of different products, or the loans associated for different products. And because you know, Bitcoin has NGU technology, it sort of it can kind of help you weather other storms that happen in other assets, and just in general, it can make a lot of sense, right? Just to, if you are thinking, okay, there's the Cantillon effect. Those people who are near the money printer benefit from that. Well, using some of that Cantillon effect to buy Bitcoin can also be beneficial to you. Now, I understand there'll be objections from that. Maybe some people have a religious objection or a cypherpunk objection to that aspect of it. But for people who, you know, are not, let's say, not held up by those particular objections, then that's the system that is likely to be that they're going to use.
Yeah, I'm fully with you. I think it really, in some way, right, lending against Bitcoin democratizes a bit the speculative attack on fiat that you can drive even as a normal pleb if you hold, you know, even part of a Bitcoin. Of course, I would never give out my whole stack, but you can decide to give out part of your stack and lend against it, reinvest it in Bitcoin. Then you drive your own leveraged, let's say, bet on Bitcoin. If you know what you do, if you've got your leverage ratio under control. I think it's actually a great thing, and it's fair, because before you could only do that if you had, you know, a whole house or several houses or other massive goods. So if you were just a normal person, it was just impossible. The money printer was far away, you were far away from it. So in that sense as well, it really levels the playing field, and I like that a lot about it.
I see, yeah. And so in terms of people who want to sign up with Sygnum, what are the typical minimum thresholds? Like, is it an income threshold or a number of coins or net worth threshold? Once you're above that, then you can be a customer. What are those thresholds?
Yeah, so basically, it's according to Swiss FINSA regulation, it means that it's either, you know, a certain wealth that you have, and now I should obviously know that number by heart. I think it's 1 or 2 million in investable, either total wealth, and then you have a threshold for investable wealth, and then there's a third condition, like, or basically, if you are, you know, a professional working in investments or so, then it can also be automatically seen that you were qualified as a qualified investor. So yeah, I'm sorry, I can't quote it by heart. I'm not part of the sales team, but it's basically a combination of or an option between those different factors.
Yeah. And then at the business or corporate level, is there a threshold, or is it just like if you have a business entity, you can sign up as a customer?
I mean, you basically can sign up. We do have minimum fees, so then depends, right? You probably calculate yourself whether it's worth it or not. And for us as well, doing the onboarding process, because legal entity onboarding is a complex process, and there, of course, we prioritize as well to see which customers have, you know, more potential in terms of the business relationship we can help them with.
Yeah. And then are there like minimum balance requirements or things like this that you need to put on, I don't know, like $1 million or 500,000 worth, or like what are some of the thresholds there?
So for private clients, we do not have any minimum fees for an account. But of course, you know, if you see that it's an unfunded account, then at some point we will probably gently ask to close the account, because again, it creates a lot of operational and compliance hassle. Let's say, I mean, we have regular periodic reviews that we have to do on all accounts, and then for corporates and corporate clients, there we basically charge minimum fees, and yeah, basically then that's I think all in our pricing sheets, and the RM teams, they're happy to explain that to all interested clients.
Gotcha. Okay. Yeah. Well, I think those are the key kind of points I had that came to my mind, at least. So I guess any closing thoughts you've got on where things are going, or what people can look out for in terms of products and services that are coming, and then tell people where they can find you online as well.
Sure. So I think, well, definitely at Sygnum, if you're a Bitcoiner, but also interested in, let's say, the banking space and banking services, then I would highly recommend to check us out on sygnum.com. We will soon launch as well an asset management product that is really geared towards Bitcoiners. That's all I can say so far. And we're working on exciting, I think, product solutions in the lending space that go more into, a more Bitcoin ethos way of lending, where you have more visibility on your keys. Again, that sounds very cryptic, but as soon as we're ready to disclose more news, we will do that. As I said, check us out on sygnum.com. We have our Twitter handle is sygnumofficial in X, and I'm always reachable as well on LinkedIn with my name, Pascal Eberle.
Excellent. Well, thank you for joining me, Pascal.
Thank you so much, Stefan. It was great to be on.